as a country, we do require liquidity, and government is still facing pressure on collecting it. We got some money from RBI, and now people are still worried that how the distribution goes on. Situation is once we talk on exchanges, situation is a bit worrisome, and people are concerned whether this rally should continue from this point, or we are heading for further slowdown, or it's just a starting of a recession. How long this is going to be, and how painful when everybody can say that yes, we are back into bull run. So standing currently, the situation is a bit tighter, and I personally believe that the slowdown, it started way before in 2018, when government announced 10% in capital gain. So the time when the booking started, and people were heavily invested in mid caps and small caps, and that was the time wherein we can say that people were in bull phase. We've seen consolidation building up in 2017. A lot of people have earned good on portfolios, but 2018 it was a gradual, slow poisoning hit to the portfolios, and people are unable to exit their mid cap and small cap holdings. So now the question is that who got hit and who not. So probably yes, funds have made money because they were largely invested in large cap funds. So probably large cap scripts, they've given a good return of 40-50%. CAGR, if you collect, then good 15 to 18% return. So I guess 2018 was a trap year. 2019, people are still stuck and they are unable to exit because the rates are so down. I mean, if you check the portfolios, the PMS houses, they're burning their fingers. Up till now, they're not able to raise fresh fund because of the performance of last 2-3 years. People are standing on the principal amount, not even that return on FDs. So probably it's a pain period to continue. I feel people have not exited the portfolios, and the mid cap and small cap, the aggressive portfolios are down by 60%, but you take mid caps down by another 30, 35, 40%. So people are largely hit on their portfolios. So I guess the pain should continue at this point. I don't find much of reversal standing in this area. We have a US election next year, and so the current, once the government, Modi, regaining in post election and the post budget, I think one thing is clear: the clearances with the 370 article, and the clearances in a form of hitting all those bogus companies, getting out of the system, and nailing their bank accounts, nailing the forgeries. So the idea from the government is quite clear that get the transparency from the system, okay, to get the income for the system, and to play big for next 4-5 years. So I guess the cleaning is on, and this cleaning should continue for somewhat a year, because this is a consolidation period. And in this consolidation, the people who are relying on the debts or heavy debts, I can say people who are relying more on the old participation of making over their balance sheets, they will be heavily hit and they will be out of system. So on the verge, when people are not ready to accept the change, when government is asking for a change, when time is asking for a change, I think they will be out from the system. The slowdown is not just because that there is a slowdown worldwide, but I guess this is something which is in-house. This correction is much required, and it's been hit. It's been run from last 10-20 years. We have seen the distribution of money largely during the Congress era, and that has converted into NPAs. How strongly they have checked the system or distributed the money, I guess at that time nobody paid the thought. So this current situation is more largely on a correction, and kind of consolidation. When I say correction of stocks which are heavily in debt, which are not based on solid, cemented fundamentals, and largely good for those companies who have been doing good with a transparent theory, applying all basic principles of business, and paying taxes to the government regularly. So clean companies, big companies, large players, good management, they're doing good, and they will keep on doing good. So idea is that who got all hit. So probably if bad companies are hit, so it's not necessary that good companies will not, because liquidity crunch will hit other companies too. There'll be a partial slowdown, a period of consolidation when good companies will be bought. But from the traders' perspective, yeah, a lot of volatility we have seen during this year. So probably this will continue till next year, because kind of V-shape recovery once we are out of this consolidation phase. So this year would end lower on NAVs. So nothing to worry as such, but I am just thinking to that this correction, if it is heading higher, so if market is moving higher highs, so this correction should certainly go down and should check the previous two lows of 99.20 and 99.50. So I've seen long-term patterns. I've understood long-term patterns. So whenever there's a long move coming, so the consolidation period, the range period are usually tested. So if you check on monthly charts, so lower lows can hit, as I said, 9,600, 9,700, and we are actually making a kind of double top bottom. And if you study in Elliott wave theory, Elliott wave will end exactly at what we made a new high, and then we made a correction of wave A, and we are currently running on wave C, and which can be like 0.5 and 0.61 and 1.61 of wave A. So that if I say the low part stands at 9,045. I don't know why and for what reason that will come, but the period of next 6, 7, 8 months is going to be a bit volatile period, and correction may come because large caps are largely at this point they are still sustaining at price to book of 4, which I don't think that it is sustainable. When we say which all stocks are actually managing the index, so we can name a few banks, few twins. So you have Bajaj, HDFCs, Reliance. So I mean, few of them holding on. So when I studied this last week, all those charts, all heavyweights, or you can ICICI or HDFC, or you can say IndusInd Bank, the banking thing, the financial part. So they are showing a kind of distribution pattern. Probably they've been distributing since like 5, 6 months, 7 months. The monthly candle doesn't show me that kind of behavior that the things are bottoming. And when I say from the valuation front, I don't expect that these banks should sustain at the current valuation, or they can stretch from current valuation to make Nifty a newer high. So when we say that, when you don't have that fundamentals to sustain current values, then there is an expectation that if everything else is corrected, mid caps, small caps, or so Nifty from the top, probably say 10%. So if these financial correct from this point, so this will largely weight on index, because these are index heavyweights, and the composition tell us that the next fall, if it is there to come, because the selling has been already done in all other sectors. We have seen metals gone, we have seen aviation gone, and you say pharma, it's already struggling since last 2 years. People have bought heavily at those prices, they're not able to come out. So other sectors are heavily out. I mean, if they have to bottom, they have to bottom on corrections. So the correction is already done. It's a pain period. So I just want to give an example of pharmaceutical when I correlate with small cap and mid cap. So if you see pharma as a sector, we have seen a large move from 2013, and the wave went up till 2017, 18 top. They made a top, and since then they've been correcting. The phase of 3-4 years, a very good bull run. People were buying because there was no other sector to perform. On a safe bet, I mean, pharma was good. There was good numbers. All of a sudden, you see the things, other sectors moving, and the pharma started correction. So if you see that, it's been 2 years of consolidation that, even as of now, the Sun Pharma is also at 400, 450. It's been like 6, 7, 8 months. It's trading near 400. So it's a bottoming kind of thing, and bottoming consolidation which is happening. And once the consolidation is done, it will start moving again. And it's a cycle. And when I compare this formula with small cap and mid cap, which, they've already shown much of correction, and they made lower lows last month. I think even this requires a lot of consolidation before moving up. Okay, so it is not going to be in a hurry. That's now it is a bottom. It has corrected like 60%, 70% from the top, and I should buy. No, I mean, all those stocks which will not perform, they will not perform, and they will die gradually. Performing stocks will, make a kind of good consolidation in the bottom. It will take a year, probably and a half. Okay, to make a fresh move on upward, then that's the point wherein you buy, higher lows and the reversals. So I think when we talk about Nifty, if Nifty and other large caps, if they start giving you a pain, then I think things gonna consolidate more. It is not going to be a sharp rally. When we say that, I maintain that it's a trader's market, right? And you need to be very sharp on picking the reversal. You should know the resistance points. You should know the behavioral pattern of indices to play along. There are a lot of stocks which have actually given a pre-move that where Nifty is heading. When I say this, it is a bit difficult to digest that there's so much correction in already mid cap and large cap, and people have not. They are feeling a kind of crisis, Indian-made crisis. They don't have much of trust, on the performance as of now. They are actually demanding government to support. So if there is a revolutionary change, it's a cyclic thing which is happening. You can't expect government to boost in, to pump in liquidity, and the system starts running. Even government is facing issues there is a fiscal deficit. Government is facing issues. They are on the drive to collect money. They have asked for money from the reserve contingency fund, I mean from the RBI. There was no need. I mean, government is facing. So when there is no money, there is, I think there is a slowdown. And I think a lot of things are, a lot of companies are facing this liquidity issue, and a lot of correction is happening within the company, the kind of model they use to perform. And I think there should be some shortage on GST collection as well. But yes, it's an era. It's an era of consolidation. It will take time. And once the correction is done, I'm extremely bullish on Indian market, the kind of consumption we have, okay, the kind of markets we have. I believe this, once the correction is done, everybody who's listening to me, this is a point to put in money. Once we are below 10,000, you start putting in your SIP. I don't know how long this is going to be, or 6 months, 7 months down. So probably we touch 9,000, we touch 8,700. Just don't panic. Keep on investing. Keep on investing. My targets for Nifty is somewhere around 19,800. I repeat, 19,800, and Sensex will be, above somewhat, 60,000. So things are going to be extremely good for long term, because I think the first 5 years of Modi was a bit of change, getting new things into the system, demonetization, hitting all political parties which were thinking for themselves, not for India. They have beaten them down. You've seen the results in elections. They are out of the system. They've introduced GST. They've done demonetization, right? And now is the point wherein they have to actually revive the Indian business cycle, okay? So I think it is now no more accepted. The pattern they were working on, the high debt, I mean, the playing with people's money, playing with banks' money. So they have to actually, companies have to actually grow organically. Then only they can expect some funds from the bank. If you visit, in fact, public sector banks, you just try to open an account. I mean, it will take 15 days. They will check each and everything which you would have expected from any private bank. So there are a lot of changes which are happening in public sector bank. And I think these banks will perform better comparatively when you say 5 years back. And gradually these NPS figures will be down. So we have, I think SBI stands too good. I mean, for ASIF, if you're buying at 260, 270, or they will keep on buying the bank. It's a backbone, right? So we know that, this will not, we have already hit a new high of 360, 370. Okay, we are in a correction mode. That's where it has given you an opportunity, standing at 260 to rebuy again, keep on collecting. It's an investment. And I believe, I think for a longer term, if you have a target for 500 to 700, say 4 years down the line, I think easily achievable. So a lot of things will change over a period of time. It is what the system is, actually what I personally believe that system is just changing the gear. The system is not actually working on previous system. So the companies which were dependent, they'll keep on asking money, and if they are not ready to change, they will face the problem. But companies which have grown well, we have companies like Nestle, Britannia, Bata, ITC. I think these companies, Bajaj Finance, probably these companies are, they've given a good CAGR. They've been giving good growth. So if you keep on investing in these companies, irrespective of what markets have done, they will give you 15 to 20% return. And that is what everyone looks forward to. You get the dividends in time. These companies will keep on growing. And that's where one should invest on. Okay. And if you really want to invest in, good mid-cap companies, I think it's a good time once the correction is headed on a panic mode. I think people will punch in. And the people who get panic, they will punch in their portfolios, and you may buy much better intrinsic values. So that's where one should invest on. It's been a year, I guess, for the equity group. They know that we are focusing on investments, and from last 1 year, I'm not aggressive at all. And you can notice that, we are not buying anything. We have not bought anything because we have been talking about correction. So if you just see whatever you invest in mutual fund since 2018, I have that session on webinar. If you check on Trading Terminology YouTube channel, I've spoken about that 2018, it's going to be traders market. It will kill investors. If you remember, these words are still there on YouTube on a last webinar session. And that's what it has happened. So if 100 rupees is currently 30 rupees or 40 rupees, we are still better not investing. We have saved that money. If investors understand this, it's a good idea. We never wanted people to lose money, and that was the idea. If you've saved that, you've earned at least FDs. And if you're not earned, even if you're just, you're negative by 4, 5% or 10%, but not doing or making an aggressive investment, you are still a winner. What we are going to buy is we are going to just buy the bottoms. We are just going to buy the dips. And I personally believe that if you want to invest this cycle, this next 3-4 years, the last 3 years of this Modi era. So probably we can say that if elections are ending at 24th is a new general election, I mean, the next phase. So probably 22nd, 21, 22, and 23. It's going to be the good golden years. And you should have all your investments in, and in good companies. You're at least going to make it thrice. Okay, 3x return is what I'm looking forward to, because if you are investing in a panic mode, it will gear up all of a sudden at 1x once market get okay with it. And once the cycle is good on reversal, good liquidity into the system, and once market accepts that that yes, we are going clean and we believe in companies, so the ratio of investors in India will start increasing. People will start believing in the system. Okay, the money will come out of banks into share market, and that's where the progress is. Once you pump in money into the share markets, that means you are investing your money into the companies. Company will get funds, which is not of debt, and they don't want to pay that interest, but yes, they might pay you dividends, which is much cheaper comparatively, and they will give you capital appreciation. That is better for companies as even they are holding that funds. So probably the cycle will change, and there is a less of interest, increase in EPS, and that's where the growth is. So what government want, what I feel Modi government want, they want that people start believing in system. So that will be only done once there is a corporate governance, once there is a cleanup in system, no one can run away with the money. They have shown you. I mean, if anybody can catch this, that Nirav accounts in Switzerland is now seized with good amount, right? So government is putting a picture that nobody can run with the money out of India, and making an investor kind of believe that these companies, whatever they have done, are now safe to invest. Take your money out from the banks, put into the equities, make larger returns, and that's where Modi is targeting for next 3-4 years. You need to see a larger picture, right? And whatever is happening, it's happening for good, I believe, right? I am totally with the market. I understand what government wants, and that is where every investor should pump in. Okay, they should have a long-term vision to make that money. So I have a clear vision that once it is down, once there is a panic in the system, once there is a cleanup, I think it's a very good bet to put on. I want every company should show what they have done in last 5-10 years. If they're not showing, government has made it very clean. You take 1 crore whistleblower amount as a winning amount, just disclose us the company, right? Government is making you a crorepati. So they want the system to be cleaned. Whatever is gone. Now please accept this, show us all. There was a message floating for Indiabull housing. I mean, on one address, I don't know how things are. It's still there. So 12,000 companies, yes, registered on one address. So see, we don't know what companies are doing right now. It is really unsafe when we predict on that, yes, it's a good company. No one can say that. We have seen RBL Bank correcting from 700, standing at 300 rupees. It's a big panic. Indiabull Housing Finance from 1,200 rupees standing at 400 rupees. And we've seen many other debt-ridden companies. We have seen people lost heavily. So it is, first of all, not easy to trade. All those traders who are professionals, they may, and obviously, if they're taking that stop losses very strictly, they are making money. Okay, it is not easy. So whatever you're doing, it's better to take a hedge play. If you really want to play long, hedge it with put. If you want to short, hedge it with call. Obviously, you can at this current time, if it is trading below 200 AMA, from last 1 year, if any stock is trading below 200, it is below 200 only. It's keep on correcting as of now. But still, I think protection, buying insurance is a good theme. And for traders, it is purely a trading market. We've seen gold too making a huge breakout from 30,000 level to 40,000, a good 25% sharp move. So I think the currency's movement still gives us a picture that market is not moving as of now, right? You don't see, obviously, it is good to think for a longer term that these stocks, whatever, the small or mid caps, whatever, they are available. So obviously, you will check on ROE, ROC, a lot of fundamental things are there, the dividend paying history. So yes, you will check, but get ready for a 3, 4, 5 years kind of frame, and that's where you make money. If there is more correction, you will still find good companies at good intrinsic values. I think Maruti started from 1,500, went up to 10,000, starting at 6,000. If you get there at 42,000, 4,200 or 4,500, it's a good bet to invest in again. So these companies going to stay the market leaders, right? They enjoy some 60% market share. So these going to stay, consumption theme going to stay. For that matter, pharma going to stay. Okay, so a lot of problems with US FDA, a lot of dependency there, a lot of diversification. So I mean, stocks are going through a consolidation era. Let them go. Let the companies face the real burn because they have not stick to the rules. Okay, so we have seen the real estate in 2007-8. Still, all those builders are still, facing that issues. I mean, a lot of they utilize the liquidity like anything. Okay, so a lot of leverage was there. So it is people's money and it got spoiled. We all know that it's an 8 lakh crore burn, and it will certainly take time to revive. The consolidation is happening because it is good to consolidate banks. It is good to control few banks than all, to having their all principles, all same theme, all same rule. So if you're merging with a performing bank, so I think things are going good. So that's why government is doing this mergers. one should accept that these things are happening for good, and it's a good golden years for next 3-4 years. Let the market correct, let it come down if it wants to come down, and let's put that money and just sit. You don't have to, money will work for you. You don't have to run, you don't have to slog to make that money. Just identify good companies, and that you can do. Just go to Money Control, check the top performers mutual fund, just check their investments. Okay, just see which companies are paying the dividend thing. Okay, so dividend plus market capitalization, both will give you handsome return. So I've given you the targets long term. Now I'll just try to